Hi, this is Marie Gibson, and I wanted to have a brief conversation with you about some of the myths that I see that business owners make. That's myths like fake or false information. And so I have three particular ones that bug me a little bit, and I wanted to share those with you and then discuss them a little bit about why it bothers me. So, number one myth is that a business owner may take the attitude that her bookkeeper, his or her bookkeeper, or their accountant handles all their books, and they tell me what you need to know. Well, I don't believe that a business owner should do all their bookkeeping or the accounting or the record keeping. I believe that a business owner should do what they do best and hire out the bits and pieces that they can in order to get professional help. It's a smart, right? Hiring accounting professionals is smart. It frees you to focus on what you do best, which is running your business. But delegating your accounting, delegating your bookkeeping, delegating your record keeping does not mean giving up your responsibility. You still need to know what your numbers mean at all times. You need to be able to read the reports. So running reports that are useful to your business, reports that help you manage your accounting professionals and your business, understanding the story, understanding the information, not abdicating everything and ignoring your numbers, but being able to share that responsibility with someone else who does then share back with you. That really would be the best of situations. That's accounting myth number one, and I've seen it over and over again. You can delegate, you can share responsibility, you don't get to abdicate your responsibility. Okay, accounting myth number two. That's actually using accounting software to record the transactions, and that's all that I need. Well, that actually may be all that you need if you're just going to use your accounting numbers to fill in your tax return at the end of the year. Some small business owners do that. Some naive business owners do that. Now, I believe that accounting software is great. It automates the process. It makes things easier, faster, quicker, better, slicker. It's not enough. So these programs record transactions, or sometimes people help them record transactions, but basically we're putting them in the software so that they're formatting into reports quicker, faster, easier, better. But they're not always recording transactions accurately. Not all expenses are the same. Some costs, some purchases, some money is going out actually might be assets and not expenses. They might be cost of goods. They might belong in a different place in your report. And that one mistake could really lower the value of your business. And when you look at the little reports that the software programs provide you, do you really know what they mean? Part of knowing your numbers also means understanding how they affect your business, understanding the story of your numbers, the story of your business, so that you can understand, use your numbers to make business decisions wisely, right? So again, myth number two, trusting that your software is posting everything exactly correct. No, you get, again, that's part of it, but it's not the entire picture. So number three, I don't need an accounting system because my business is very simple or I'm very new. Well, you may not need accounting software, but you may want to look at an accounting system, a process that allows you recording your money in and money out. Now, I would even argue that we might have some costing that needs to be done. And I'm going to give you an example of Paula. And this is what Paula came to me. She was a student and she was an actual client, real client. Her name was not Paula. And again, for those of you who know me, I protect the confidentiality of my clients or my students who come and ask for help. But she was making specialty candles on the weekends. So she had a job and she was trying to make soaps and candles. It's very common. It's been common for a while in this area. And she generated decent money. She was getting $700 a month profit in her pocket, like over the top after paying her costs, her expenses. And her accounting system really couldn't be easier. She added up the weekly sales, subtracted the expenses. However, when we actually took the numbers and I showed her how to break those out, she realized that most of the sales were from the least profitable product. And the product sold really well, but her, what we call the margin, the little bit that was left over, wasn't very much. But she focused on them because they sold well. Her numbers showed that if she spent the same amount of time selling, producing her high profit product, she could triple her income. And by knowing her numbers, she did make this shift. Knowing her numbers, within a few months, she left from pocketing $700 a month to $2,100 a month, free and clear, for the same amount of work. We just shifted it to working on something else. So, are you losing money on any one product and service? It's called a loss leader. A lot of big companies do it. You lead with a loss, and then you make up for it in other areas. You have add-ons, you have upsells. I would be really careful about selling too many of those that you're losing money on. And yes, you may wish to choose that strategy, but you should analyze your decision first. After all, if you're the one making the business decisions, shouldn't you base those decisions on real clear facts and not on myths? So that's Marie Gibson's and her musings. Thanks for tuning in.